It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. Well, lots of change, right? The ceasefire, Strait of Hormuz. We'll get you those updates here in just a minute. But of course, we'll get you the Market Watch, stocks we're paying attention to, national and local stories that you need to know as well. And let's not delay it all. Let's get into it with that Market Watch. Well, if you missed the news, the ceasefire, I guess, is on hold right now as well. Oil prices are back up to about $100. Well, Iran accused the U.S. of breaching the ceasefire yesterday. So Strait of Hormuz only had 4 ships go through it yesterday, but so that's affecting the market today with those oil prices as well. The Strait of Hormuz is not open. Iran is controlling the access after the ceasefire still. We got an inflation report breaking right now as well. Inflation held sticky. It's at 3%, as well. Fed gauge. It's just breaking here this morning as well in terms of that news. And you see on your market here, it's basically after 30 minutes of being open or so, it's basically at the even point here as we're talking about as investors are trying to ingest what's happening, and also oil prices back above $100 a barrel today. As Dow Jones right now is down to 8 points to 47,864. S&P 500's, well, it's basically even, about 0.7 points up right now to 67.77. NASDAQ's in the same boat as well. NASDAQ's basically even right now as well. It's at 22,585. Then you got the Russell 2K today, basically even. 0.5 points up right now to 26.21. Then Bitcoin, well, it's still above 70,000, although it is falling today so far as well. So obviously traders are keeping an eye on the U.S.-Iran ceasefire. No major sell-off here today. Yesterday, obviously, a huge gain on the market, as you saw in the morning, and that continued throughout the day. There's something to keep an eye on here, and it's just basically going around to the actions that are going to happen over there in the Middle East as well. And as I told you, just breaking right now, the core personal consumption expenditures price index, 3% is what it was at in February. It's all from the Commerce Department. It's an all items headline inflation is up to 2.8%. That's where you get the sticky inflation, meaning it is not moving off this number over the last year or so as well. Consumer spending was up about 0.5% on the month as well. Personal income, though, did fall 0.1% as well there. So that is breaking right now. We have those initial numbers without delving into it as it's breaking here as the show is starting. Then stocks we're paying attention to right now. First one, CoreWeave out there. They're an AI cloud computing stock. Well, they are up 0.24% as of right now. CoreWeave announced a $21 billion expanded infrastructure deal with a very large company called Meta Platforms. Here's what they said, CoreWeave, in a release. The quote, the dedicated capacity will be deployed across multiple locations and will include some of the initial deployments of the NVIDIA Vera Rubin platform. This distribution approach is designed to optimize performance, resilience, and scalability for Meta's AI operations. That's what CoreWeave said in a statement as well. So with the sell in pre-market, it was about 5% up. With the sell-off that's starting to happen on the market, you're seeing CoreWeave now turn to the negative side as we talk about them. Even with that pretty big $21 billion investment here, expanded infrastructure deal with Meta Platforms here on CoreWeave. Then we got Constellation Brands out there. Alcohol consumer or brand here, Modelo, Corona. Oh, they're big brands. Well, they're up right now 3.37%. It withdrew its 2028 guidance, and they just blamed it on uncertainty. They even reported a subdued demand for their products out there. We know consumers aren't drinking like they used to. Constellation Brands has been hit with that as well. So now its full-year earnings guidance fell short of expectations. Now they've they withdrew its 2028 guidance as well. But its fourth quarter results did come in above Wall Street's estimate levels. Constellation Brands right now up 3.66% here this morning. And then a company called Star Surgical. That's Star with 2 A's, folks. 19.01% up right now as even with the sell-off, it's coming down a little bit. It was up over 27% a little bit ago. They guided they basically for their first quarter revenue was in excess of $90 million. Yeah, the expectation was only $67.6 million. Blew their revenue out of the water. That's why they're up to 18.92% right now here on the market. When we come back later and look at the stock market, of course, we'll see if there's a big sell off happening, if that's going to continue to happen. We'll also look at Applied Digital stock. And if no shocker here, we'll talk about travel, we'll talk about airlines, we'll talk about oil stocks as well, with oil going back up to $100 a barrel here this morning as well out there on the market. We've talked a lot about this Iran war, the effects of that with tariffs, the effects of that with the economy, etc. Let's focus on a few other studies that we found out there as well around what Americans are thinking. And the first one here is Americans. Well, you might be one of these that you're expecting to work about 4 years longer than you want to. Yes. Rising living costs, healthcare expenses. Well, those are reshaping your retirement plans as we speak. This is all from new research from a company called Economic Enterprise. Only 1 in 5 workers do say that they want to stay in the labor force longer because they enjoy their jobs. That means everybody else is staying because they can't afford not to. It was all published with support from investment firm Nuveen, this report was. Nearly half of the respondents cited living costs as the main reason they expect to delay retirement. So, all of these findings are based on a survey of only 2,063 full time U.S. workers, and those workers are at mid-size or large companies at the same time. This study also found that about 1/3 of workers have taken a loan from their 401k or even made a hardship withdrawal. We gave you that study, about a week and a half ago or so here at McCollum on Business. A record share of Americans tapped their 401k plans last year to help with financial emergencies. At the same time, that also will delay your retirement if you're having to do that as well. Generation Z workers, if you don't know, Generation Z's 1997 to 2012, well, they're the most pessimistic about their retirement prospects. The people in that group, well, they're expecting to retire 5.2 years later than they would like to. Well, Gen X workers, right, those of us 46 to 61, well, we expect to postpone retirement by 3.9 years right now as well, according to this survey. So, give you an idea. So, maybe you're thinking that a little bit. Well, you're not alone out there if that is absolutely the case. And then we're getting something also that's developing that's kind of fascinating here in the United States. They're calling it the Boom Belt. It's an 11 state, we'll call it a powerhouse, but it's an 11 state area in the United States and the Southeast. And the Boom Belt right now shatters records and challenges the traditional financial dominance of places like New York and Chicago, right? The no shocker here, we're talking about Florida, Texas, and that whole range. And governor and Texas governor, they joined forces in Miami this week. They celebrated a $9 trillion gross domestic product region that is now outpacing every other quadrant of the country in population, jobs, capital investment. Right? California's kind of hung their hat on that for a long time here as well. The governor spotlighted how the states of Alabama, Arkansas, Florida, Georgia, Louisiana, Mississippi, North Carolina, Oklahoma, South Carolina, Tennessee, and Texas. Those states now generate $9 trillion in annual GDP. Yeah, trailing only the U.S. and China globally, and they absorbed 70% of all U.S. population growth in the last 5 years as well. So that is now being called the Boom Belt out there. It's being celebrated by governors in those areas. A lot of people moving to those areas and moving from other areas as well into those areas to get into that jobs and the money and everything happening there as well. But we now have a name for that area. And I want to give you an update here on OpenAI. Remember, they started doing ads. They tested the ads. They're going to continue to do ads as well. And ads, folks, are now a huge part of the OpenAI business. And why? Well, because they expect to generate $2.5 billion in ad revenue this year alone, $100 billion by 2030. Yeah, this is they did a big presentation to investors this week, and this kind of leaked out from it as well. So the ad pilot that they did, which means remember when we told you here at McCollum on Business that you're going to start seeing ads there, they rolled it out. The ad pilot by itself, it generated $100 million in annual recurring revenue in under 2 months. Obviously, huge growth there, and they're projecting steep growth moving forward as well. So the OpenAI did tell investors they expect the $2.5 billion in 2026 ad revenue. They say in 2027, it's going to grow to $11 billion. They're $25 billion in 28 and $553 billion by 2029 is what they were putting on these projections. The projections does assume OpenAI products reach 2.75 billion weekly users by 2030 and then capture the share of the global ad market dominated by Google, Meta, Amazon, and TikTok. So they're not just saying they're going to grow ad revenue, they're saying they're going to take ad revenue from the ones that already have it, right? Google, Meta, Amazon, and TikTok as well. So chatbot ads, well, they could be unusually lucrative, and that's because they can be tailored ways because users actually volunteer exactly what they want. The second you type into that chat box, you're telling them what kind of ads you want to see based on the subject you're typing in to ChatGPT. Meta and Google have built effective ad businesses by both knowing and inferring what their users like, what their users care about, and what the users want to buy. Well, with chatbots, the guesswork is gone. Users tell you what they want to see with their search out there. So that's the money OpenAI is looking at here with ad revenues. And at the beginning, they're kind of on their own island with the ad revenue side of it. None of the other AIs were kind of jumped onto that bandwagon. Well, that'll change though. If you're going to get that much money here, you're going to see everybody jumping on that ad bandwagon here with those chatbots as well coming up. And then a little story about AT&T and Fanatics teaming up here in the sports world. AT&T, well, they're the office connectivity provider of the fan. That's what they're calling themselves now because they've partnered with Fanatics. If you don't know what Fanatics is, it's a sports platform. They do jerseys and a lot of other things. It's an exclusive multi-year partnership they announced yesterday. Fanatics and AT&T, well, they're going to combine their respective strengths to bring about new value for fans across the U.S. They're going to tap into the AT&T's expansive reach and cultural relevance. They're going to deliver specific and special benefits for Fanatics customer base moving forward. If you don't know about the Fanatics ecosystem and what they do, well, it continues to evolve and it's expanding at huge rates as well. But it consists of about 100 million sports fans, according to Fanatic. They cultivated relationships with more than 5,000 high profile athletes and celebrities. So Fanatics has one of the largest relationship hubs in the sports industry as well right now. So leveraging AT&T's real network, which they claim is fast and reliable. I have AT&T, folks. And then also with their enterprise expertise, Fanatics will enhance the way it delivers that forward technology forward experiences, immersive experiences for sports fans here in the U.S. So AT&T, well, they'll be helping deliver those moments to fans no matter where they are. Also having customers gain access to exclusive Fanatics experiences, rewards, and opportunities. So there you go, folks. Working together, and this is all going to be kind of working together with that Fanatics One out there. That's Fanatics company-wide loyalty program that offers a unique selection of things like rewards, access to experience, events, those types of things. AT&T is going to be pushing stuff into that model. AT&T customers will always have additional ways to earn fan cash. Yeah, I know. Fan cash, the currency that's redeemable within the Fanatic system as well. So those two teaming up. And golf fans, if you're a golf fan, you woke up today and the Masters is here starting today. Kicks off. So that means the season is changing because the Masters is the, unofficial start of the summer golf season for most of the country out there. Golf fever is getting high with the Masters starting as well. But if you're a local golfer, you know that there's a lot of bad things about booking your tee time, etc. And one of those worst feelings is just booking a tee time and then not being able to make it there, or not finding the tee time that you want at the course you want to play at as well. And then, of course, if you have to cancel, green fees go to waste, and nobody's out on the course because they don't fill that spot. There's a new company called Golf District, and they're attempting to salvage, well, to help out these to get filled afterwards. So basically, think StubHub, but for golf here instead of tickets. So now this is a company that's been out for about a couple years now. They've already worked through approvals and agreements with select courses. And they say, of course, no doubt, it's a win win for everybody involved. But 10% of reservations currently booked for golfing is never fulfilled. Golf courses lose money when people don't make their tee times that they scheduled in advance. The golfers pay because they don't play at golf either, right? You get charged for that. And then unused reservations keep other golfers that want to play off the course. So they say they're not just a modern booking engine. They say it's better provided access here to the golf tee times. They say they get a lot of people outside the industry that get it right away. Golfers get it right away. So the golfers now have that access that they want that they didn't have, and the ability to resell their times, with this thing. Like I said, StubHub, you have a golf time? 9:10, Superstition Springs. I'll just throw it at a golf course. Well, you can't make that tee time. You throw it up here, goes on the resale market, boom. Now you can sell it to somebody else looking for that tee time and that specific time. So they say, this company says that when they open up a new course, well, they get a lot of golfers that thank their customer support team for being available, either to sell the tee time or to get it as well. Golf districts, like I said, less than 2 years ago on the market, but they have had conversations with high profile courses, and then they're adding at astronomical rates as well. So just saying, I don't know what courses are on there. I went to the website and saw they are limited, but something to keep an eye on. StubHub for golf now, folks. Yeah. Hey, did you wake up this morning wondering who's now a billionaire out there? Well, I can tell you. You can add Dr. Dre. Yes, music mogul. Been in the music business for obviously many decades now. And, 2001, he still had that track, Still Dre. How long it's been, folks. Well, he's officially a billionaire now in this world. Now, he's joined Forbes' billionaire list out there. So he's 61 years old. You know him, Andre Young. He's Forbes' April-May cover story. You can obviously read the story on Forbes.com in their magazine and things as well. But he's on the Forbes billionaire list. He's between Vladimir Ivanov, who's a technologist, and he's also there between Donald Trump, son-in-law Jared Kushner, is where he's sandwiched between. He joins other musicians, Beyonce, Rihanna, Bruce Springsteen, Taylor Swift, Jay-Z. They're on the Forbes World Celebrity Billionaire list that he joins them as well. So Dr. Dre, newest Forbes member, billionaire member, at least in the celebrity circuit as well. So if you're interested, more importantly, this story is more about the Forbes billionaire list that's coming out. But Dr. Dre, cover story, and now on that list as well. And interesting enough, it's not all music for him, right? He founded Beats with a partner, and sold that to Apple, I believe, if I remember it was, and they sold it for like $3 or $4 billion at that time. Him and his partner. Then it's also music and other things that Dr. Dre is involved in out there. And folks, when we come back here, we'll get into some local stories coming your way. Well, that Kroger Albertsons merger that was deemed, that had prevented some regulatory problems. Well, Arizona's not done with that yet. We'll talk about that coming up here. Kelshi, well, they went to an appeals court, and with this Arizona legal fight, we'll have the update there as well. That SRP election was the other day. Do we finally have who won this thing? They were adding up ballots left and right yesterday, trying to figure it out. Low counting, I guess, right? So many people voted. But we'll get you that update as well. And then, you ever heard of something? Because I've never heard of this before. But have you ever heard of a Nido, the squishy toy? Kids probably have. You probably have if you have kids. We'll tell you about that as well and why everybody's looking for them. Come on back, folks. Home on business. And we're back here, McCollum on Business Thursday edition. Of course, as soon as we get done here, well, we roll into the main event here, live 8 to 10 a.m. as well here, Robot TV. Of course, as soon as we're done here, we put it up on demand there at our YouTube production channel there, TME Media AZ. Find that out. Subscribe to that if you would. All of our programming goes up there on demand. Share us with your friends. Main event, as soon as that's done live here, 8 to 10 a.m., well, we put that up on TME Media AZ as well on the YouTube page. Free podcast systems as well for that show. Just search the main event with Steven or the main event with Dale, TME Sports Show. Pops right up for you. Follow us on X as well, TME Sports Show, where you can find us and talk to us. And that show does have a text line, 623-252-6670 as well. And then we go into, of course, after that, the pit stop will be out today as well. We look back at the limited racing last weekend, Easter weekend at the Rockingham. Look ahead this weekend, Bristol here for the NASCAR guys. We have a pit stop coming out later today. You can find it on demand here, Robot TV. TME Media AZ is where you can find it as well. Free podcast system for those of you rather listening to that. The pit stop talk is where you can find us on X. And also if you search for the podcast system or just search the pit stop with Steven, it pops right up for you as well on Apple, Google, Spotify, iHeart, your favorite podcast system out there. Then, of course, tomorrow morning, The Real Matrix is out. New episode, 10 a.m. here, Robot TV. Noon on your favorite podcast systems. Just search Real Matrix, Angry Patriot. It'll pop right up for you on your favorite podcast system. Or if you want to watch it, you don't want to go to Robot TV, well, go to rumble.com is where you can find that show in all of its glory. Break it up into two parts there at Rumble. New episode. It's about the vax again, the third episode in that vaccine series. The Angry Patriot. Would love for you to join them with an open mind. Rumble.com/user/TME Media, and there it'll pop up for you as well there on Rumble. So, folks, new episode tomorrow at noon on Rumble and the podcast systems as well. And, folks, let's get it back into that Market Watch. And, look, everything is selling off here today, as I told you earlier. Everything is down as well. Lots of red up there, as you can see. Dow Jones down to 85 points. S&P 500 down the 9 points right now. The Nasdaq's down 90 points. And the Russell 2000 down the 7 points right now as well. Things are sliding because oil has risen over $100 a barrel again this morning. Traders are just keeping an eye on this quote-unquote ceasefire that's happening between the U.S. and Iran. And then we got that inflation report this morning as well that came in at 3%, which I think inflation has been sticky. It's continuing to be sticky, and it's held sticky here at 3% here this morning as well. So this is the core personal consumption expenditures price index. So 3% in February is where it's at, and this all comes from the Commerce Department. The all items headline inflation measure was at 2.8%. I told you earlier as well, consumer spending was up 0.5% on the month. Personal income, well, it fell 0.1% also in the month. That report broke as we were going on air today as well. How much is that contributing to the sell-off today? I'm not exactly sure, but we do know that, the war obviously is the bigger thing here as well. And inflation numbers are coming in where expected. It's just not going down at all. And more importantly, not rising as well. The Commerce Department did say economic growth is slower than previously reported for the fourth quarter of 2025 in that report. So we'll dissect that report today after the show because it broke right as we're going on air. Anything major, but we'll put out on the socials and or talk about it tomorrow as well here on the marketplace. Stocks we're going to pay attention to now. Well, the first stock we're going to show you, the one graph, is a company called Applied Digital. They're down 6.77% right now as well. It just moved to 6.73%. They are the operator and maker of high-performance data centers. They blew past estimates in its latest earnings. Yeah, their third quarter numbers were $44.1 million. The estimate was only $19.3 million. Blew it out of the water. Stock's down 6.77%. Why? Well, this stock was ridden up before they announced their numbers and high numbers. So 17% this month, this stock is up before today, higher than 13% this total year as well. And then today, when they blew out their earnings numbers, that's when the stock goes down 6.87% based off of those numbers. That's kind of what you can attribute it to, a big run up leading up to this number right now for Applied Digital Corporation. Now, we're done with the graphs here because we'll just tell you kind of industry stuff here that's happening. No doubt, oil companies, they're moving higher today because oil is back over $100 a barrel. Now, yesterday, U.S. West Texas Intermediate crude, biggest single day drop since 2020, down to about $92 a gallon, back up to 100 today, which means all the oil companies, right? At ConocoPhillips, Chevron, BP, they're up over 1% here today. APA, Occidental Petroleum, Halliburton, all up today as well, between 1% and 2% roughly. So, not a surprise that's happening with oil prices going back up over $100. Well, airline stock, they all had a reprieve yesterday and shot down. Well, today back up. They shot up yesterday, back down today. Oil prices means higher expenses for the airlines. Alaska Air is down about 2%. United, American, Delta, they're down about 1% today as well. After having big gains yesterday with oil prices dropping, cruise operators are no different. They're slipping here today as well. Royal Caribbean, Norwegian Cruise Lines, right now, they're about 1.5% to 2%, respectively, between those. Carnival was down about 1% right now as well. So, it's the standard thing. Oil prices shooting back up. If you work in oil, you're going to make more money. Your stock has gone up. If you rely on oil and need it cheaper to have lesser expenses, your stock is down today as well out there. Not a surprise, but what's happening here on the market today as well. Local stories we need to give you a little bit about. Well, remember that Kroger Albertsons merger that fell apart due to some government regulation issues? Let's put it that way. Well, Arizona was involved in that, and now Attorney General Chris Mays, well, she wants more than $972,000 repaid back to Arizona from the two grocery companies for the work her office put into blocking their attempted merger in 2024. Now, to me, this is dumb. They didn't force you to block the merger. You did it on your own, right? But legal papers filed in federal court up in Oregon, well, they say that's what Arizona spent in legal fees and costs fighting the proposed bid by these companies. Yeah. So Mays isn't the only one seeking reimbursement. Several other states who were involved in the lawsuit. By the way, the FTC, if you remember, led this lawsuit. They just joined onto it. They also want some money. These other states do. The requests total more than $10.3 million between all of the states, with their hands out asking for the money. The attorneys for the affected states, they're telling the U.S. District Court judge that the amount is justifiable because they're citing a filing by Kroger with the SEC that has spent more than $1 billion over 3 years in the unsuccessful merger. That doesn't make any sense to me. They spent $1 billion in a failed merger, and now it's justifiable that the states get paid back? Yeah, I don't understand this at all, folks. Maybe somebody smarter than me can explain it. Yeah. Mays got involved in this merger back in 2023 when it was announced fairly early on as well, So there you go, asking for money back. I swear, I know that's her job. I know that's the role of the, Attorney General is to sue people. But she's not found a lawsuit she does not like getting into. No doubt about it, including Kelce, right? We know that she's suing Kelce for being in the prediction market side and not being part of the state gambling regulations. Well, the company Kelce now went and they're the target of criminal charges here in Arizona as well, if you remember. But the Third Circuit Court of Appeals has ruled New Jersey itself cannot block Kelce from offering contracts on sports events because they're federally regulated by that Commodity Futures Trading Commission. This obviously is going to affect Arizona's lawsuit with the criminal charges and everything because lots of suits are suing this as well. So the Arizona AG's office, well, they have a precedent ruling there in New Jersey now. Kalshi won that. And don't forget, Kalshi Poly Market, regulated by the feds. The feds are very adamant they're regulated by the feds, but the states are trying to gain control of it. So one appeals court over there in New Jersey says Kalshi, they're doing everything legally and the states can't touch them. We'll see where that goes here in Arizona as well. And that SRP elections that happened 2 days ago now. So they happened on Tuesday. Counting all day yesterday. This is the election that sets, rates, the desire, the direction of SRP as well, right? Of clean energy, fossil fuel energy. These are the board that sets those tones and everything. And the election for the SRP leadership, a lot of attention, which generally this is a quiet election. It drew a ton of attention. One of the reasons why, rates and everything, obviously, but Turning Point USA got involved. The Charlie Kirk, people got involved in this as well. So Tuesday was the election day. There was an early voting period that began March 11th. I did see the lines to vote. You have to be a landowner to vote. And I did see the lines to vote were outrageous because they had one polling place as well there. Landowners within SRP's 10 voting divisions were eligible to participate. Your vote, it was weighted on how much property you own and the size of your property out there. So this is going on. The unofficial results were released Wednesday, and they showed Turning Point Action, all right, actually lost a majority of the SRP board seats to clean energy team candidates. It spent 10-1 is what the numbers I was seeing Turning Point spent to get their candidates on this board. Majority of them lost out there. Two Turning Point candidates, though, did win SRP president and vice president, which obviously they have a lot of influence as president and vice president and can set the agenda, etc., moving forward. So that's the results of it as well. Is what's come out of that election. Turning Point USA shut out for the most part. 10-1 spending odds to lose all, but like I said, they're important position, president and vice president. But getting shot otherwise with spending that kind of money is kind of interesting. So Chris Dobson is going to be the board president coming up as well, and then the vice president. These are the Turning Point candidates. Barry Paisley is the new vice president there on that board. So we got the results now. Like I said, I believe SRP does it right, in my opinion, as opposed to APS and Tucson Electric and those guys. Yeah, SRP utilizes clean energy, solar power, etc., but they also, still work with natural gas and coals and stuff like that. They integrate all three of them. That's the thing I'd like to see keep going. But Turning Point wanted more fossil fuels and the old time stuff happening. The clean energies wanted to kind of keep it the same or strengthen those up a little bit. So we'll have to see here because that does affect our rates here coming up with SRP. And folks, I've never heard of a Nido squish toy. Well, they've been around since 2017. And now they're all the rage now as well as what you're looking at, right? And these, it's a trendy item out there. And there's the Nido on your screen right now. I don't even understand what it is. But, there's Stanley Water Cup craze from a few years ago, Trader Joe's tote bags recently, all the way back into the 80s, right, and 90s, right, Beanie Babies, things to that effect. Trendy things have always kind of got a rush here. Drawing attention, shoppers in the stores looking for them, fights happening, and etc. Nido Toys launched in 2017, but they're getting a recent spike in popularity. Yes. And online interest has skyrocketed here for these items for in-person shoppers. So if you see them in a store, you won't. Empty shelves everywhere. People are hunting for the toys like the old days, the Beanie Baby days is what they're doing. So the parent company for Nido is called Schilling Inc. They said some stores that stock the products as well, they're saying that the popularity online has created an unexpected spike in demand for the thing. And they can't produce them enough. They go so fast, they can't produce them. Yeah. Nido's launched in 2017, as I told you, with a single item. And that was when fidget toys and spinners were all the rage. Since then, the brand has steady annual growth in its line of products. It's expanded to over 50 items since 2017. Now, yes, social media activity, well, it's reached a tripping point and up popularity to an unseen level for these Nitos, which are sensory toys. If I didn't make that clear earlier, they're like the spin, fidgets and things to that and stuff as well. So now they said they've been planning for demand because demand has been going up since 2017, but they've had 10 times demand here with these little things as well on the Nito side. You just can't produce them fast enough. They're priced between $5 and $10 at stores as well. So, like I said, you squeeze it. It's a way to reduce stress. Kind of like the fidget spinners and the stress dolls and things to that effect. So it's that's what it's used for. If you don't know, now it's all the rage and everybody wants. Now you need one in order to go buy one because you're stressed out trying to buy one of these things, so they don't exist out there right now. Yeah, there you go. Are you looking for a Nito? Are your kids looking for a Nito? And everything. That's the bigger question. Don't buy them on the secondary market if they're $5 to $10. Go back to fidget spinners or something as well. So there you go. People line up for these items when they go in when they know stores up. People are waiting 2 to 3 hours for stores to open on days they know they're receiving them. You can have a lot less stress in your life if you're not trying to track down Nitos, folks. Hey, appreciate you joining us here on McCollum on Business. Hey, if you're in line for a Nito, hopefully we entertained you a little bit here today. If you're headed to get in line for a Nito, maybe we gave you a heads up. You might be waiting a little bit there as well. We'll see you tomorrow, folks. Friday's edition. Don't forget, main event coming up next, 8 to 10 live here. Uncle Lou coming in today. Like usual, Del Illustrate the whole program today on this Thursday. Normally takes off early on Thursdays. Sticking around with us here today, folks. Appreciate you joining us. Check in on the market tomorrow. Get you ready for the weekend. Come and join us. McCollum on Business.